today's resource person, Shivateja Todutnuni, and my dear students, very good evening to one and a hearty welcome to you all for the first day of virtual series of program for the 4 days on the subject GST returns law and practice conducted by Vijayawada branch of SICASA. As a part of our promise to make you update on all filings of direct taxes and indirect taxes, we planned this program on the practical aspects of GST returns. First day, Sir is going to cover on basic concepts. Second day is on GST at 1 and 4. And third day on GST at 3B, 2A and 2B. Fourth day on GST at 9 and 9C. Dear students, having knowledge and filing of GST returns is very much important if you go to any job after you finish CA. Due to pandemic, you may not properly attend to the articleship. So this is the golden opportunity where you can update your knowledge on this aspect. Thank you all. Now let us start the program with our institute motto.
Yeah, you all need not stand up. As a mark of respect, you can keep your right hand on your heart.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Pursho Nirmimanaha Tadeva Shukrada Brahma Tadeva Amritamuchyate Tasmin Lokaha Shataha Sarve Tadunatyati Kaschan Etadvaita
Now I request our chairman of Vijayawada branch, C.A.K. Punnichandarao, to give his welcome remarks.
Yeah, thank you, ma'am. Today's resource person, not only for today, entire 4 days resource person, C.A. Shivateja Garu, Vice Chairman of Vijayawada branch and SICASA Chairman, C.A. Shita Shirin Garu, SICASA committee members, SICASA Vice Chairman Shashank, and committee members, my colleagues at MC, and all students who are logged in for today's webinar on GST returns, filing of GST returns, and law and practice. Good evening to one and all. At the outset, I welcome you all for today's webinar on especially on basics of GST and overview of filing GST returns. Who is going to be Sir is going to deal this today. I request all the students to utilize the opportunity because of COVID pandemic. I think most of your principals are not asking to come to office. Hope so. At least I think so. Few of might be attending remote mode. I don't say that you are not attending at all, but so anyway, it is not so hectic. At least in the month of June and July, you will be busy in filing individual returns or conducting first quarterly return quarterly audits. But we got stuck with this pandemic situation, which is very sad. But anyway, we are all got stuck at home. So please utilize the opportunity. Being provided by Vijayawada branch of SICASA, like filing. We are coming up. Madam has already conducted a few series of programs on filing of returns, various returns, TDS returns, maybe TDS returns or company returns. ROC forms. So as part of that, we have come up with CA Shivateja sir. Sir has a vast experience, and I have seen his profile actually. So he has already trained almost 12,000 students and organized lots of programs. So please utilize this golden opportunity. And I also request all of you to not to venture out, because being youngsters, you are not getting. Even I have repeated this in few other sessions before when I attended the seminars also. We are carrying this to the grandparents or our parents at home, because we are not being affected by the coronavirus, not so much. Not at least you people are not being affected, but you are carrying this infection to the at home. So please do not venture out unless it is necessary, or your principal asks you to venture out for any other audit or something like that. Okay. So, and not only that, you all also might have been aware that who are writing IPCC Group 2 exams, as fine schedule is finalized. I mean, there is no change from July 5th. Exams are being conducted. So please plan accordingly and be successful in your IPCC exams. And for those who are writing, I mean, who are already completed and attending these programs, we have Vijayawada YouTube channel, which is a wonderful channel. I mean, we are already crossed 20,000 subscribers. So please log into that YouTube channel. Such programs also where miss out this. I mean, you want to have a repeat of this program, can log into YouTube channel and listen over there. And not only that, we have, I mean, there almost each and every video is being uploaded, which we have conducted the program for members also, we are being uploaded there. So those who are enthusiastic and I mean, those who are enthusiastic and keen of to learn subject, you can log in there. We have recently conducted a series of 5 days program on accounting standards with experienced and eminent speakers. So it will be a bouquet of knowledge kept over there on the YouTube channel. You can slowly jot down the vital aspects touched upon by the speakers, and it will be helpful in your appearance in CA final, or maybe later on also in your when you're coming, be it in practice or be it in industry. And I also request you to be keen in full, between 6 and 8 p.m. whatever sir stresses upon, so that it will be a guiding notes for in future to be your article experience at your office, or be it in your own life. Okay. With this, I hand over the proceedings to ma'am or Shashank, whoever is this, Shashank, to continue. I request you to introduce the speaker to all our students. Okay.
Yeah, thank you so much, sir. I hope I'm audible.
Yes.
Yeah, thank you so much, sir. Good evening, everyone. CAT Shivteja was a qualified chartered accountant as well as cost and management accountant. In the very first attempt, he got qualified as both CA and CMA in the year 2011. CA Shivteja also pursued certification course on international taxation conducted by ICAI in the year 2012. His previous experiences includes he have worked with Ernst & Young team for 2 years and was practicing since 2012 as a partner with Rao and Shyam Chartered Accountants, having its offices at various branches and locations in South India. Handled a lot of scrutiny and survey cases, and he was also the co-opted member of the Students Committee of SIRC of ICAI for the year 2016 and 17. CA Shivteja has presented on various topics in the field of taxation, both the direct and as well as indirect taxes, across various branches of ICAI and also other firms. Taught more than 9,000 students for taxation subject since last 8 years, and the students have been extremely benefited from his in-depth knowledge and work experience. He has also trained more than 3,000 students for CA final indirect taxes, that is GST, at various places like Hyderabad, Pune, Mumbai, Bangalore, Cochin, and Calicut. I request all the students to take an active participation and get in-depth knowledge of this topic. I, on behalf of all the members of Vijayawada branch of ICAI and SICASA, heartily welcome the resource person, CA Shivteja sir, to this 4-day session of filing of GST returns, law and practice. Thank you so much, sir, and over to you.
Thank you so much, sir. Thank you. Sir, am I audible, sir? Yeah. First of all, thank you so much for this wonderful opportunity to interact with the students, especially in these circumstances where physical classes or physical appearance cannot be done. Virtually also, there is a lot to learn. So I'm sure with this 4-day session, you guys will get some great amount of knowledge with regard to the GST returns, law as well as practice. And the reason why we have framed this language as law and practice is because we have seen practically so many circumstances where some students have got some good knowledge theoretically, but when I ask them to execute, they'll start stammering. That's one situation. And second category also is there. They are masters in filing GSTR 1 and 3B, but when I ask one question, what does this blocker credit mean? They'll start looking at my face top to bottom. True. So there are two categories of students. Some category are masters in theory, but missing out in practice. Some are vice versa. So we thought we have to bring a blend of the subject in terms of understanding the conceptual provisions, at the same time linking that provisions with respect to the forms what we have got, so that line by line, point to point, every line item in the form should be clear to us along with the conceptual provision. With that idea, we have framed this seminar, and I'm so glad and happy that I got 4 days because I can spend enough sufficient time with you guys. So we divided the session into 4 parts so that first day today, I can spend time with you on few introductory basics of GST, at the same time overview of a lot of GST returns. And next session, we can talk about GSTR1, then 3B, then about annual returns. We divide it into 4 days so that you get immense knowledge in every area. And at the same time, we can also give you enough time for your queries and concerns or any doubts what you have faced practically, or any subjectual query what you have got, you can feel free to post, because I can definitely get you both practical knowledge at the same time the conceptual understanding there. And any doubts during the session, my recommendation is that please put that in the chat box. I'll be definitely happy to reply, even if not immediately. If I'm in the middle of the subject, immediately I'll just give a pause 15 minutes or 20 minutes once, and I'll solve your queries. And if some minor queries are there, I'll solve at the end of the session. Okay, guys? Yeah. So with this, I'll start off and I'll share the presentation with you guys so that during the session, you can see that file.
Students, sir will be sharing the file in the chat box. You can download at your end and you can go through that if you want.
Yeah. So it has been sent through chat box. You guys can keep that document for your reference. Anyways, I'm referring to the same document, so you can use it for your reference. Sir, is the screen visible, sir?
Yes, sir.
Yes, sir. Yes.
Perfect, perfect. I'll go ahead then. So guys, welcome you all to the first day of discussion with relation to the basics of GST and overview of various GST returns. When I talk about GST returns, the only thing which comes to the mind, especially from a student's point of view, is GSTR1 and GSTR3B. But let me tell you, there are much returns beyond 1 and 3B. So don't just restrict your thought process only to 1 and 3B. There are much more returns to learn. Today, let's have an introduction about what are the various GST returns we have got, and we can talk in detail about every return. Let me proceed. Thank you. Yeah, so today's session, guys, we'll cover about first the basic understanding about GST. Second, we'll talk about the types of returns. Then we'll also talk about interest and late fees on delayed filing, because that's very important. A lot of times, a lot of our clients whom we are dealing with, they end up paying this interest and late fees. Of course, interest is something which is judgmental, because practically GST return is not automatically calculated in the interest. But subsequently, after the return is filed, there is a high possibility that GST department may come up and ask us to pay the interest. And we'll also talk about return correction. What happens in case where we file the return, but we have done a small mistake in that? That's highly possible. Human error, or maybe some mistake has been done intentionally. In any case, how do we rectify that mistake? That also we'll talk here. So these are the 4 areas, prima facie, what we'll talk in today's session, guys. And as you guys know that this taxation is one such area, especially be it income tax or be it GST, everybody has got knowledge. Be it a client, be it as a chartered accountant, be it a chartered accountant as a student, everybody have knowledge. Everybody have knowledge. Could be less or could be more, could be a different knowledge, could be all together some nonsense knowledge. But knowledge is there, that's for sure. Because when 2 people talk about tax, third person will come and interfere and talk about tax, because he also knows something about tax. So, but it is important that being a chartered accountancy professional, we get the right knowledge, not just some knowledge, we get the right knowledge with respect to the GST as well as income tax. So here we will talk about various returns and also the basics of GST along with interest and late fees on delayed filing. And finally, I'll also talk about return corrections. What happens in case where we do a mistake in one particular return? That area also will cover here. Yeah. So now, guys, first of all, what exactly does GST mean? A lot of people say one statement that GST is a combination of all the old taxes. In fact, I myself have seen one situation where one client, when GST was launched on 1st of July 2017, as you all are aware, that 1st of July 2017, 1st July, a fantastic day. In fact, even a Chartered Accountants Day. So that is the day when GST has been launched in India. When GST has come to India, one client called me and told me, sir, from this year onwards, I'll stop paying income tax. I bluntly asked him, sir, why do you want to stop paying income tax? He said one line, sir, I want to stop paying income tax because they said that GST is one nation, one tax. Then why should I pay income tax? Then I said, sir, please understand, one nation, one tax doesn't mean that GST replaced income tax also. Income tax still is in existence. It is only that lot of various indirect taxes have been subsumed into one law, that is GST, in order to make sure that various indirect taxes existing in India have been conglomerated to make it as one nation, one tax, which is nothing but GST. And let me tell you guys, GST stands for Goods and Services Tax. I'm also surprised that a lot of people use this word goods and service tax. But let me tell you, it is not goods and service tax, it is goods and services tax. And this word GST is actually defined in law in Article 366(12) of the Constitution. In fact, my dear friends, in Constitution, they have brought 101st Amendment Act for the purpose of introducing GST in India. Now, let me take 2 minutes of your time and tell you why Constitution was amended. As you are aware that Constitution, being a supreme law in India, that any other act in India derives their principles, derives their laws only from the Constitution. Now, what has happened is, in India, there were so many taxes which were levied only by central government, and there were so many taxes which were levied only by state government. For example, income tax levied by central government, customs duty levied by central government, value-added tax levied by state government. Like this, there were multiple taxes of which some were levied by central government and some were levied by state government. But there was never a tax in India which was levied by central and state together. I repeat, there was never a tax in India which was levied by central and state together. So, for the purpose of giving that dual power to the center and state, where center and state together will levy and collect the tax, to give that dual power, they have made sure that they amended the Constitution. Because for the first time in the history of India, there has been some tax which have been brought into light, which is levied by center and state together. Prior to that, there was never a tax which was levied by center and state together. Now, you please should not get it out. Sir, what about CST, Central Sales Tax? Now, let me tell you, once upon a time, I agree that there was a tax known as Central Sales Tax, which was levied on interstate sale of goods. But let me tell you that CST was levied by central government, collected by state government, but it was not levied by center and state together. I'm talking about a scenario where center and state together are levying and collecting tax. It's not just one center, it's something like center and state together and coming and collecting tax. It is something like in movies they show, right? This is your share, this is my share, this is your share, this is my share. Like that, they are dividing. Both of them together are coming and attacking. That's why this GST model, what we follow in India, is known as a dual GST model, which we did not invent that. We have basically taken that from Canada. Canada has already got this model of dual GST model where center and state is together levying and collecting tax. And from that country, we have taken this model. In India, we have a great option, right? Control C, Control V. So we are so used to it. If that is not there, we will not survive also. Yeah, that's very much important. So this model, what I'm talking about, dual GST model, has actually been taken from Canada. It's a Canada model of GST, where we've introduced a dual GST model where center and state together will levy and collect the tax. Now, let's look at what is the definition of GST. Come on, please look at that. GST is any tax on supply of goods or services or both, except taxes on supply of alcoholic liquor for human consumption. That line is a very interesting language actually. Come on, what is that language what we use there? A tax on supply of all goods or services or both, except what, guys? Alcoholic liquor for human consumption. There is some good amount of importance for this word. The reason being very clear that alcoholic liquor for human consumption is permanently kept outside GST. Now I'm repeating that word human consumption because every alcoholic liquor is not human consumption. There is also some other alcohol known as industrial alcohol, which is used in manufacturing different products, including medicine. They are not being kept outside GST. They are still covered in GST. Now, what is kept outside GST is only alcoholic liquor for human consumption. Now, please don't get it out. Sir, when will they bring this in GST? That's not possible because as per Act only they have specified that they are completely kept outside GST, because definition only says any tax on supply of goods or services or both, except tax on supply of alcoholic liquor for human consumption. So alcohol liquor for human consumption is being permanently kept outside GST, which will never come into GST law. Now, another doubt which can come is, sir, what if it is not covered in GST? That means we should start enjoying and dancing? Answer is no. Definitely, because if it is not covered in GST, doesn't mean it is not taxable. It is still taxable, but old taxes only will apply. The old taxes like VAT, service tax, central sales tax, they only will apply, but GST will not apply. Alcohol liquor for human consumption is permanently kept outside GST, unlike the petrol products. Now, one point which can come in the brain is, so a lot of times we see newspapers, articles that they are saying that they'll bring petrol and diesel under GST. In fact, in the given circumstance where the hiking of petrol and diesel rates are so high, so high, and government keeps saying that it's becoming so high because of the taxes which have been involved. And there is a high possibility that this petrol products might come under GST, because unlike alcohol liquor for human consumption, these petroleum products are only temporarily kept outside GST. But this alcohol liquor for human consumption is permanently kept outside GST. So this alcohol liquor for human consumption is never ever subject to GST. Next point. Next line you can see, guys, where supply includes. Now, what is the significance of this word supply? Friends, let me tell you, there is some importance for this word supply. Yeah, before I proceed to supply, there is one query raised in the chat box by one of our friends. They're asking, sir, why is it kept outside GST? What is the reason behind? Oh, very good. Good question. Let me tell you answer for that. Yeah, the point is very clear that alcohol liquor for human consumption, prior to GST law, the tax and the power to levy tax on the alcohol liquor for human consumption was purely with state governments. State government has got power to levy tax on alcohol liquor for human consumption. Now, what has happened is very clear that when government has told that they are bringing GST into picture, now one big doubt which has come is that states were okay to sacrifice any revenue, but they were not at all okay to sacrifice revenue on alcohol liquor for human consumption, because state government gets enormous revenue from alcohol liquor for human consumption. And that is the reason why you would have observed that last year also, when lockdown was unlocked, you would have remembered the first thing which was opened was the liquor stores, because that's an area where government gets huge revenue, which they can't compromise. Clear? And that is the reason why predominantly state governments told we will support for GST provided you do not trigger alcohol liquor for human consumption. I'm sure I'm clear with this. Yeah, perfect. So with regard to petroleum products, guys, the petroleum products have just been temporarily kept outside GST. Government is examining how GST will function. In 2017, when they brought GST, they told we will cover everything under GST. But for the time being, we are putting the 5 petroleum products, that is petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. I repeat, petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These 5 petroleum products have been temporarily kept outside GST. So at any point of time, they'll come into GST. And government, in fact, last year, they have also examined what would be the implications if they bring it to GST. And a lot of states had to support to that, because as on today, there are tremendous multiple taxes on petrol. So government is still examining whether to bring these 5 petroleum products into GST or not. And there is a possibility they can bring, because these 5 are only temporarily kept outside GST. But alcohol liquor for human consumption is permanently kept outside GST. Done. I'll proceed. Yeah. So next point, guys, with respect to that word where supply includes, there is some importance for this word supply. The reason being very clear that prior to GST, we use the language sale of goods, purchase of goods, providing services, rendering services. This was the original language what we have used prior to GST law. Providing services, rendering services, sale of goods, purchase of goods. This was the language what we actually used prior to GST law. But under GST law, there is no word known as purchase and sale. The only word what we have got is supply. And there is a tremendous importance for this word supply, because whenever I show you the forms in the subsequent classes, subsequent lectures, what we have got in the subsequent programs with respect to GSTR 1 and GSTR 3B, there I'll show you that in the form, nowhere you will find the word purchase and sale or providing service and rendering service. The only word you will find there is supply. So there is some tremendous importance given for this word supply. So if it is purchase, we use the word inward supply. And if it is sale, we use the word outward supply. But the only word what we use is supply. Now, what is supply? Please see that. Supply includes all forms of supply of goods or services. Please see that, come on. All forms of supply of goods or services such as sale, transfer, barter, exchange, license, rental, lease, made or agreed to be made. Made, that means it is done or agreed to be done for a consideration by a person in the course or furtherance of business. So, in order to regard a transaction as supply, the first interesting point they have given is that it should be in the course or furtherance of business. So, if it is not in the course of business, we will not tax it at all. Now, let me take a small example here. Yeah, my dear students, come on, please listen. So, let's take a situation where Shivateja has got one gold chain with me. Okay, my gold chain has become old. So, I thought I'll go to a gold shop. Let's say I'll go to one store known as Lalita Jewelers. There I thought I'll exchange my old gold chain and take a new gold chain. Now tell me, from the shopkeeper point of view, there is an exchange. From Shivateja's point of view also there is an exchange. But let me tell you, from shopkeeper's point of view, it is a supply. But from Shivateja's point of view, it is not a supply. Because shopkeeper point of view, he has done the transaction of exchange in the course or furtherance of business. But from Shivateja's point of view, I have not done that in the course or furtherance of business. So from my point of view, it is not a supply. I'm sure this example makes sense for everyone. Yeah, so can I proceed, guys? Done. Next point. So if we look at the next point, guys, B point says importation of service. What is that word? Import of service for a consideration, whether or not in the course or furtherance of business. In fact, this point you'll understand very clearly now, especially after COVID, when you are sitting at home, you'll understand this point more clearly, because nowadays we got used so much to Amazon Prime, Netflix, whatnot, Z5. So many options are there nowadays for us to watch any kind of movie. Whenever any movie comes in television, we tell, why TV? Let me put on my OTT channel and watch any movie at any point of time. Or any TV series, Family Man, whatnot. People have gone crazy now. So the point is now, you have to understand here that when I'm talking about import of service, let me take an example of Netflix. Because Netflix is not sitting in India. Netflix is basically sitting in foreign country. They're operating from foreign country. So we are importing service for a consideration. We are paying a price, whether or not in the course or furtherance of business. Now tell me, guys, did we take service from Netflix for business use or personal use? 100% we have taken service. 100% we have taken service from Netflix, and it is not for business use, it is for personal use. But let me tell you, even though it is personal use, still it is supply, because you can see that language, importation of service for a consideration, whether or not in the course or furtherance of business. So whether it is in the course of business or not in the course of business, still it is definitely a supply when we talk about import of services. That is the beauty of this. Clear? Yeah. So let me move forward to the third point, guys. Certain specific transactions are regarded as supply, even though there is no consideration. So there are some special cases which is regarded as supply, even though there is no consideration. This is a crazy point for a simple reason, because we are talking about a case where consideration is not there, but still it is a supply. Wow. We are talking about a situation where consideration is not coming, money is not coming, but still we are saying it is a supply. Such a brilliant point, guys. Now let me explain that point to you, my dear friends. I'll just take a small example here so that you get clarity of that. Hold on. Just give me a minute, guys. Friends, could you please anyone respond if the screen is visible for you?
Yes, sir, it is visible, sir. You can.
Yeah, thank you so much. Thank you. Yeah, so when I talk about the special circumstances where it is supply, even though there is no consideration, guys, first thing I'm sure you all know that in GST law, when we take registration, I'll ask you one question. What is PAN? We know that PAN stands for permanent account number, which we have taken under income tax. Now, one point, guys, how many PANs can a person have? Tell me, will a person have 10 PANs or 20 PANs or 1 PAN? Guys, come on, obviously, guys, we'll have only 1 PAN, same like your Aadhaar card. You cannot have multiple Aadhaar cards. In a similar manner, you'll also have only 1 PAN. But let me tell you, under GST law, the concept is not like that. Under GST law, we are required to obtain registration state-wise and not centralized. This point is very significant and very important because under GST law, for example, if Shivateja is there, and let's say Shivateja is operating in Telangana state, and I'm also operating in Andhra Pradesh. Now, when I'm operating in multiple states like this, Telangana, Andhra Pradesh, now let me tell you, in Telangana, I'm required to take one registration. Andhra Pradesh also, I'm required to take one registration. So it is not that GST, even though it is one nation, one tax, I'm still required to take separate registration in every state. Separate registration in every state. Now, you have to observe that the PAN is same, but GST number is different. I repeat, Shivateja has got only 1 PAN. Shivateja does not have multiple PANs. So PAN is same, but GST number is different. Technically, we call it as, technically, we regard it as distinct persons. I repeat, we call it as distinct persons because the PAN is same, but GST number is different. Now, one point here, what I told is, in Shivateja's case, the PAN is same, but GST number is different. Now, what happens is that this GST number is basically a 15-digit alphanumeric code. How many digits, guys? It's a 15-digit alphanumeric code where first two represents the state code, like how Telangana has got 36, AP has got 37, every state has got first two digit as state code. And next to 10 is certainly PAN. PAN is permanent account number given by the income tax department. So indirectly, you have to get some concept here that without having a PAN, you can't get your GST number. Yeah, next. And next one is always, my dear friends, entity number. Why we say entity number? Because, for example, in Telangana, if Shivateja has taken first registration, then this will be 1. But if I take one more registration in Telangana, then this will be 2. Please understand. Now, don't get found out. Sir, if you go to AP, will this be 2? Answer is no. Because if I go to AP, automatically state code has changed. Why entity number will change? Because already state code has changed there. Yeah. And next one is Z, my dear friends. And this is always fixed. Please do keep in mind that there is always Z. No doubt about it. Any GST number you look at, 14th one will always be Z. And the last one is, my dear friends, it could be a number or it could be an alphabet. An interesting point is this is randomly assigned. No significance for the last one. It is just randomly assigned. And the reason why I explained this concept of different GST number in different state, I've got one logic for this. Listen carefully now. Now, let me take a small example here. That, let's say Shivateja, I'm a dealer in laptops. Okay, guys? When I say that I'm a dealer in laptops, now I've got a business in Telangana state and I've also got business in Andhra Pradesh. Now, can I operate the business in 2 different states with same GST number? Answer is no. The logic is simple because in different state, different registration is mandatory. Yeah. Now, in Telangana, I've got GST number. In Andhra Pradesh also, I've got one different GST number. Clear? Everyone? Right. Now listen. Now what I've done is from Telangana warehouse, what I've done is basically I've done some from Telangana warehouse, I have done some stock transfer to Andhra Pradesh. Now, strictly speaking, guys, did I make any sale to a third party? Answer is no. What I've done is purely a stock transfer. I did not make any kind of sale. What I've done is only a stock transfer or a branch transfer. That's it. Like how when principal is sending stock to the agent, that is a pure stock transfer. It is not a sale. It is just purely a stock transfer. It is not a sale at all. But let me tell you guys, even though it is stock transfer, still it is supply. Because let me tell you, it is governed under section 7(1)(c), read with schedule 1, which talk about transactions which are regarded as supply, even though there is no consideration. So here, even though there is no consideration which is coming from Andhra Pradesh to Telangana, still this transaction is regarded as supply. I know you might start feeling painful, sir, why is it supply, sir, why I should pay tax, sir? It is just a stock transfer. Still they're asking me to pay the tax. But let me tell you, you still have to pay the tax, because you have to understand that Telangana GST number will pay the tax to the government. And that tax paid by Telangana GST number will be taken as credit by Andhra Pradesh GST number. So there is no revenue loss. It is only that whatever tax we have paid, it can again be claimed as credit by other entity. Now, again, one doubt will come, sir, what is the reason they're asking for tax? Because government wants to track the transactions. They want to know from where what is happening. That's the whole idea, guys. That's the whole idea. Even recently, you know that, I'm sure you would have heard about something called 206C 1H or 194Q TDS, in case where you buy the goods for more than 50 lakhs in income tax. Why they are trying to bring all these kind of sections? The reason is very clear, that government wants to track every transaction. They are saying one line answer, we want to see. Like how there is a dialogue, right? Nation wants to know. Exactly. Something like that. They want to know every transaction. They want to see every transaction. That's it. Yeah. So I'll clarify any doubts left, then I can proceed. Yeah. So one student is asking, turnover thing which are there in GST, does that turnover apply to distinct to each GST number or all together? Let me tell you, my dear friend, whenever we talk about turnover limit for registration and all, we always calculate aggregate turnover. Aggregate turnover always means all India basis under same PAN. So there is no question of seeing GST number wise turnover. We will always see based on same PAN. So to calculate turnover limit, we will combine Telangana AP turnover together and then see that. Next. One person, do we have to pay tax on the supply? Yes, that's what I just told you already. Done. I'll proceed. I'm sure the PPT is back for all of you guys. Done. Perfect. Thank you. Thanks for your participation. Yeah. So guys, moving forward. See here, come on. So what are outside GST? I just wrote there what are outside GST. Please see that. Outside product covered, alcohol, liquor for human consumption, and power to tax still remains with whom? The state. That point I already told you guys. Then 5 petroleum products, that is crude oil, diesel, petrol, natural gas, and ATF. And ATF stands for aviation turbine fuel. And for these products, GST Council will decide the date from which GST will be applicable. GST Council, I'm sure you guys know that GST Council is a committee of central and state level members who sit and then decide for any change related to GST. In fact, at the end of this presentation, I also have some interesting point related to reduction in late fees, which have been brought by GST Council recently in their 43rd meeting. That point also I'll discuss with you. Yeah, next point. Tobacco. Let me tell you guys, tobacco is a part of GST, but power to levy additional excise duty is still there with central government. So tobacco is a part of GST, but power to levy excise duty is still there with government. And you should not get turned out, sir, why they are still kept their power to levy excise duty. The reason being very clear that they want to collect both the taxes, saying one statement. saying one wonderful statement saying that tobacco is harmful and injurious to health. We are collecting more tax so that you won't consume it. As simple as that. Next slide. Entertainment tax levied by local bodies. This power to tax remains still with local bodies. When I say local bodies, classic example is municipal corporations. Next. So guys, what are the various taxes under GST? Say CGST, SGST, IGST, and also UTGST. So these are the various 4 taxes what we have got. Generally, in supply, we always say that there are 2 types of supply. Number 1, intrastate supply. Number 2, interstate supply. In case of intrastate supply, we collect CGST and SGST. And in case of interstate supply, we collect IGST. So what are 2 types? Intrastate supply and interstate supply. For intrastate, we charge CGST and SGST. For interstate, we charge IGST. Now, when I say CGST and SGST, CGST amount central will take, SGST amount state will take. And IGST, what is IGST? IGST name only says integrated GST. Integrated GST. This IGST will be levied by central government. IGST levied by central government, and then it is shared along with state governments also. And finally, last one, it is UTGST, which is applicable in case of union territories. Now, for union territories, don't think it is only UTGST, it is CGST and UTGST. Like how CGST and SGST is collected, in the same manner, CGST and UTGST is levied. Like CGST and SGST, CGST and UTGST is levied. Clear? UTGST stands for Union Territory Goods and Services Tax. Yes? Come on, next. So guys, you can see that just for your brushing of your concept, please see that CGST is the indirect tax levied by central government. It is levied on the transaction of goods and services which are undertaken within the state, that is intrastate. And the tax collected under head CGST is payable to the central government treasury, of course. Then SGST represents the tax imposed by the state government. SGST is levied on the transaction of intrastate sale of goods or services, that is sales made within a state. And the tax revenue under SGST goes to the state government treasury or the eligible union territory where the consumption of goods or service has taken place. Now, don't get one doubt why union territory has come. The reason being very clear that there are 2 types of union territory. Number 1, union territory with state legislature, union territory without state legislature. In case of union territory with state legislature, SGST is levied. But in case of union territory without state legislature, UTGST is levied. That is why you have to understand why that word union territory has come in SGST Act. Don't get that doubt. Next, UTGST. UTGST is just the way similar to SGST. The only difference is that the tax revenue goes to the treasury for respective administration of union territory where goods and services have finally been consumed. Next point. IGST. IGST is levied on all interstate supply of goods and services by the central government. This applies both on a sale made outside the state and those made outside the country. So technically we call it as interstate supply. For interstate supply, we do not collect CGST, SGST. What we levy is IGST. See one interesting note below. CGST and SGST or UTGST are all charged at same rate. We know this basic point. For example, if GST rate is 18%, we always collect CGST 9, SGST 9. It is not that 10, 8, 12, 6, 15, 3. We don't do that. It's equal. So are charged at same rate. This is done as per the dual GST model followed in India. I told you that we have taken this model from Canada. So this is done as per dual GST model followed in Canada, followed in India, which has been taken from Canada, where both central and state governments have their respective taxation legislature. I told you that CGST part central will take, SGST part state will take. That is why, guys, in tomorrow's session, when I discuss about PMT 06, one form for payment of tax, there I'll show you that while making the payment of tax itself, we have got separate columns for CGST, SGST and all. And accordingly, we do that payment. Next. Yeah, please see this point, guys. Taxpayers With aggregate annual turnover in a financial year, when I say aggregate turnover, it covers all taxable, exempt, intrastate, as well as exports. It covers all taxable, exempt, intrastate, exports. That too on all India basis under the same ban. That is what is covered in aggregate turnover. In a financial year, up to 20 lakhs need not obtain registration. Logic is simple. 20 lakhs is something like a threshold limit for registration. And this 20 lakhs is not like income tax every year basic exemption limit. Once you cross 20 lakhs, you will take your GST registration. And once you take GST registration, you should start paying GST on every rupee you get. You cannot tell every year I will take 20 lakhs benefit. This is not like income tax basic exemption limit. Please understand that. Now, for certain special category states, the threshold limit for exemption is only 10 lakhs. Now, what is covered in certain special category states? What are covered is only Manipur, Mizoram, Nagaland, and Tripura. Only these four are covered in certain special category states where the limit is not 20 lakhs, the limit is only 10 lakhs. Clear? Next. Taxpayers making interstate supplies of goods. What goods? Interstate supplies of goods, and taxpayers who are required to pay tax under reverse charge mechanism. I'm sure you guys would have heard about what is reverse charge mechanism. Like in case of insurance agent to insurance company, recovery agent to bank, director to a company, and in case of GTA, goods transport agency, these are all specific transactions which are covered under RCM, where supplier is not liable to pay GST. Instead, recipient is liable to pay GST. That is why we call it as reverse charge mechanism, where supplier is not liable to pay GST, recipient is liable to pay GST. In those cases, there is no question of threshold exemption. There, they directly have to pay tax and they should take registration right from day one. They cannot take the benefit of 20 lakhs. Clear? So there's a point about the registration, the basic which I wanted to give you there. And next point, small taxpayers with aggregate turnover in a financial year up to 1.5 crores shall be eligible for composition levy. Composition is one such kind of scheme where these guys will not take input tax credit. They just pay tax on output turnover at a small percentage. And is applicable only to manufacturer, trader, restaurant and catering service. For manufacturer, the rate of tax is only 0.5% plus 0.5% on the turnover. And for trader, it is 0.5% plus 0.5% on the taxable turnover. And for restaurant and catering services, it is 2.5% and 2.5%. That's a tax directly what they pay on outward turnover. They will not take any input tax credit. And moreover, this composition registered person, they will not pay tax on monthly basis. They will just pay tax on quarterly basis. For composition, we have got specific forms like CMP 08, GSTR 4, that also we'll talk in detail. And next line, other cases, composition scheme limit is 50 lakhs. That means other than manufacturer, trader, restaurant, like Shivateja, if you talk about Shivateja, chartered accountant, I'm not covered in manufacturer, I'm not covered in trader, I'm not covered in restaurant, but I can still go for composition scheme where 50 lakhs concept is there. That is, if your aggregate turnover in preceding year is not exceeding 50 lakhs, current year you can go for composition and you'll pay tax at the rate of 3% plus 3%. Unlike trader, where it is just 0.5 plus 0.5, for other cases it is 3% plus 3%. That is CGST and SGST. Clear? Done. So before I proceed, let me clarify some doubts what students has got. One student has asked, sir, what is difference between SGST and UTGST? Already I told you this. SGST is state GST, UTGST is Union Territory GST. And in case of Union Territories, we do not charge SGST, we only charge UTGST. Then one of our friend is asking, sir, what about 40 lakhs limit for only goods? Good. I'll answer this. So let me share my other screen so that I can easily answer this and you will get more clarity on that. Yeah, so I hope the other screen is visible now, the plain screen. Done. Thank you so much. Yeah. So, okay, friends, please listen here carefully that when I talk about registration limits, in this, we divide this into 3 categories, guys. Number 1, Manipur, Mizoram, Nagaland, Tripura. In these 4 states, the limit is only 10 lakhs. That means if a person is engaged only in goods or only in service, or if is engaged in both, still registration is required only if turnover exceeds 10 lakhs. Second category. In case of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and finally last one is Telangana, guys. These are the 6 states box where, let me tell you guys, the limit is 20 lakhs. That means if you are engaged in goods or engaged in service or engaged in both, still registration is required only if turnover exceeds 20 lakhs. Next. Finally, last category, other states. When I say other states, what can be covered here? Other state could be Gujarat, Andhra Pradesh, Kerala, Tamil Nadu, whatnot. For all other states, guys, if a person is engaged exclusively in goods, I repeat, exclusively in goods, then the limit is 40 lakhs. Exclusively in service, the limit is 20 lakhs. If you are engaged in both, then also limit is 20 lakhs. So the story of 40 lakhs will come into picture only if person is engaged exclusively in supply of goods. Now let me tell you, I had one of my clients in Andhra Pradesh. What happened is his turnover was about 33 lakhs. I took GST registration for him. And what has happened? The limit of 20 lakhs became 40 lakhs if it is goods. And that client of mine was in service sector. He was an interior designer. His turnover was 33 lakhs. I took GST registration. One day, an article came in Andhra Pradesh local newspaper stating that GST limit increased to 40 lakhs. This man immediately called me and told, sir, let's cancel GST registration. I asked, sir, why? He told, sir, limit became 40 lakhs. You didn't tell me only for the sake of your fees. You did not tell me this and you are still continuing my GST registration. I told, sir, please don't see headlines and get carried away. Don't act like TV channel or TV news channel where they'll tell second wave, third wave, fourth wave, whatnot. If you see that news channel means over, that day you will not sleep only. Something like that. So I told him, sir, please see the whole content. You are a person who is engaged in service. That 40 lakh story is only in case of person engaged exclusively in supply of goods. Please get my point very clearly. If a person is engaged exclusively in goods, then only it is 40 lakhs. Clarity, that is what is very important. Extremely important. People say so loosely, so comfortably they tell 20 lakhs became 40 lakhs. Wow. But let me tell you guys, that became 40 lakhs only in case of exclusively in goods. That is clarity of thought. That is what is important. Ground reality. That is important. Very important. Because in your, don't think that otherwise that I'm telling again and again about Corona, but one line I will tell you guys. 6 months back or 3-4 months back, when everybody was talking on the phone call, they used to ask, how are you? Are you fine? Are you safe? And they used to ask one question. Did you take vaccine? Now, new question. Which vaccine you have taken? Did you take Covaxin or did you take Covishield? How is Sputnik? Man, you first take some vaccine. Then talk about which one you have taken. That is a problem, right? That is a problem, guys. First, get a clarity of thought on what is supposed to be done. Then get into the real story there. So that's what I'm telling you very clearly, that this 40 lakh story will come into picture only when person is engaged exclusively in supply of goods. That's a point. Are we clear? Now, one point let me clarify here, because I'm seeing the chat box that a couple of students have got this down. Why different state, different limit? Now, one point let me tell you. Originally, there were only 2 limits, 20 lakhs, 10 lakhs. And 10 lakhs was there because this Manipur, Mizoram, Nagaland were actually very much underdeveloped states. That's where they kept low limit. Low limit they kept because government will get some tax. If they keep 20 lakhs limit only, government will not get any revenue, because this Manipur, Mizoram, Nagaland, Tripura are northeastern states which are still developing. That's why they kept limit as 10 lakhs, so that government will make some revenue. Now, why this 40 lakh story will come, but that one more doubt will come. There no cerebrum, cerebellum, any doubt can come, nothing wrong. And obviously, it's our fundamental duty to get our doubt clarified. Don't worry. Now, the point is that why this 40 lakh story has come is that central government told that we are giving power to the states, saying that whichever state you want to increase the limit to 40 lakhs, you can do that. And these 6 states, which I wrote in between, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, these 6 states did not increase to 40. They told we will stay 20 only. But all the states, they straight away increase the limit to 40 lakhs. But again, last time I'm telling, this 40 lakh story will come only if person is engaged exclusively in supply of goods. Done. Let me get back. I hope the screen is again visible, guys. Yeah, thank you so much. Thank you for active participation. Yeah, next. So guys, you can see the types of returns here. This is very important. First slide, we are done with basics of GST. Now let me start with the types of returns. First thing you can see that the first form what I wrote there is GSTR1, which you know that GSTR1 is a statement of outward supplies. What is it? I'll give an overview today, but full details will follow tomorrow. In the next session, it's completely about GSTR1. But today I'll give an overview on that. Next, CMP08, which is for composition person for the purpose of quarterly payment of tax. And that also I'll give an overview today. Details will follow tomorrow. Next. The next form there, GSTR5, very interesting. I'll discuss that today. GSTR5 is a return in case of one special person known as NRTP. Who is that NRTP? We'll talk. Then GSTR6, GSTR7, GSTR8. 6 is for input service distributor. 7 is for person doing TDS. 8 is for person doing TCS. What is that? We'll talk. Not income tax TDS, TCS. It is GST, TDS, TCS. We'll cover that. Then GSTR2A, GSTR2B, then GSTR3B. These 3 parts, 2A, 2B, 3B, we will cover in detail in our third session where it is all about 3B, 2A and 2B. But of course, today I'll give an overview because the purpose of today is all to get an overview of all the returns. Then GSTR9, GSTR9C. 9 is an annual return. 9C is a reconciliation statement. Finally, GSTR4, that is also an annual return, but in case of a composition registered person. GSTR4 is not for normal registered person. That is only in case of composition registered person. What happens there, we'll talk in detail. Don't worry. Next. The first one, guys, GSTR1, please see that. What is covered in GSTR1? GSTR1 is a return for what purpose? It's a return for outward supplies. In fact, we always say that GSTR1 is a statement of outward supplies. What is GSTR1? It's a statement of outward supplies. My voice is audible, right? Because a couple of them are saying voice is not clear. Can I proceed? Sir?
Sir, it is audible, sir. No worries, sir. It is audible. You can carry on.
Yeah, thank you so much, sir. Thank you. Yeah. So GSTR1 is a statement of outward supplies, which is undertaken by a normal registered taxpayer under GST. Please understand that it is a statement of outward supply. We do not declare the details of our inward supplies. We only declare the details of only outward supplies in GSTR1. In other words, this return showcases the sales transaction of a business in a particular month. And technically, we use the word outward supplies. Then, every normal registered taxpayer under GST, why did I say normal registered? Because the composition registered person will not file GSTR1. So, every normal registered taxpayer under GST is required to furnish GSTR1 each month. And this return showcases the details of what? Invoices, debit note, credit notes. and also revised invoices issued pertaining to your outward supplies. Now, let me take 2 minutes of your time and discuss something important here. Now, first thing, GSTR1 is what? GSTR1 is very clearly a statement of outward supplies where we disclose various details, my dear friends, advances received, invoice details, B2B, B2C, all that we'll show. What is all that? We'll talk in detail, don't worry. But there's an interesting word there, invoices, debit note and credit note. I feel so surprised and so sorry at times that students so easily say, sir, debit note is for purchase returns, credit note is for sales returns. But let me tell you, that's only an accounting answer. That's a pure accounting answer when you say that credit note is for sales return, debit note is for purchase returns. That's 100% fantastic answer from an accounting standpoint. But that's not the correct answer from GST standpoint. The reason being very clear that in GST, both credit note and debit note are given by supplier only. But credit note is a document given for the purpose of reducing the tax. I repeat, credit note is a document given for the purpose of reducing the tax. Debit note is a document given for the purpose of increasing the tax. Let me take a small example here. So let's say Shivateja is there. I sold some goods to you for some value, and after some point of time, you did not like some goods, you returned that goods to me. So technically there is a sales return. So my value of supply is reduced. In that case, I give a credit note to you. This point you know that credit note, sales return, fine, done. But what is debit note? For example, let's say I have provided some supply. So basically I've done some supply for you. I've done some supply of services for which the rate of GST was actually 18%. But in the invoice what I have given, instead of charging 18%, by mistake, I have charged 12%. I was supposed to charge 18, but by mistake, I charged only 12%, which I subsequently realized, oh man, I should have charged 18. How did I charge 12? Now, what is that short I have charged? 6% less I collected from you. In that case, for that 6% of the tax, I will not give a new invoice. What I'll give you is only a debit note. Debit note is a document given by supplier for the purpose of increase in tax. Credit note is a document given by supplier for the purpose of reducing the tax. So please don't tell an accounting answer, debit note, credit note, seller will give, debit note, buyer will give. It's not like that. Under a GST law, either debit note or credit note, any of that is given by supplier only. And debit note is given for the purpose of increasing the tax. And credit note is given for the purpose of reducing the tax. That's it. Clear? Very important. Get a clarity on this. Because tomorrow's lecture will talk full detail about GSTR1. There you should not be surprised what is debit note, what is credit note. So who will give that debit note, credit note? Either debit note or it's a credit note, it is still given by supplier only, my dear friends. And debit note is for the purpose of increasing the tax, and credit note is for the purpose of reducing the tax. Next point. See that. So a couple of doubts from our friends. Let me also clarify them. Yeah, one of our friends is asking, so sir, for 6% increase, should we again charge GST on the debit note? Let me tell you that 6% itself is a tax amount. So there is no question of again charging GST on that. And practically what happens is that debit note is a document given where in case we charge less amount. Now we have to understand that in my example of 6% tax, that is only tax. So we again do not charge tax on that. For example, let's say I've given some service to you for 1 lakh. Instead of billing for 1 lakh, I billed only for 80,000. I missed it. 20,000 short I billed. So for 20,000, I'll give a debit note to you. In that case, for 20,000, again I will collect tax. But when 6% example I gave you, which is tax itself, there is no question of again charging GST on that. I'm sure I'm clear. Yeah, next. One of our friends is asking next interesting question. Sir, what about commercial debit note or credit note? Very good. Very good. Good question. This commercial debit note or commercial credit note are those documents where there is no GST impact on this. And I suggest that let's defer this discussion to tomorrow, because commercial credit note, commercial debit note, this story will come in detail in GSTR 1. When I talk about tomorrow, complete session on GSTR 1, better we'll talk there, because that takes some sweet time. Tomorrow I'll spend time on it. Next. Yeah, that's it. So commercial credit note, debit note, we'll talk in detail. Don't worry. Next. One of our friend is asking, sir, how to give effect of debit note, credit note in GST return? That's what I told you, my dear friend. We'll discuss that in GSTR 1. I'll practically open the GSTR 1 and show you tomorrow, because tomorrow it's time for GSTR 1, and day after we'll talk about GSTR 3B also. In that discussion, I'll show you practically how to enter that data in GST return. Don't worry. Okay? Yeah, next. Because in GSTR 1, there's a separate column for a debit note and credit note. Don't worry. Of course, in 3B, we don't have a separate column, but in GSTR 1, we do have a separate column for debit note and credit note. Next point. Let me proceed. The due date to file GSTR 1. Filing frequency of GSTR 1 is currently as under, and the reason I use the word currently because it keeps changing every now and then. See that? The filing frequency of GSTR 1 is currently as follows. Monthly by 11th of succeeding month. If the business either has an annual turnover of more than 5 crores or has not opted into QRMP scheme. QRMP, one new concept which we'll talk. Quarterly by 13th of the month following every quarter, if the business has opted into QRMP scheme. Now, what is this QRMP scheme? Let me take 2 minutes of time and explain this concept to you first. Introduction I'll give you today. I'm telling you again, today I'll give an introduction overview of that QRMP. Full details will follow tomorrow again, because tomorrow we have got a separate session on QRMP. But I'll give an introduction because you should understand what is it. Hold on for a second. Yeah, I'm sure the screen is visible, right? So now, guys, the interesting point is that there are taxpayers whose turnover is more than 5 crores. There are taxpayers whose turnover does not exceed 5 crores. For those taxpayers whose turnover is more than 5 crores, there is no question of QRMP scheme. There is no QRMP. And what does QRMP actually mean? Let me tell you, QRMP name only speaks quarterly return monthly payment. I repeat, guys, it is quarterly return monthly payment scheme. So monthly you pay the tax, but file your return on quarterly basis. When I say return, it basically means GSTR 3B. Now the interesting point is that please understand that it is quarterly return monthly payment scheme, and this is not applicable to those people whose turnover is more than 5 crores. So these guys will bluntly file GSTR 1 on monthly basis by 11th of next month. No doubt about it. And apart from GSTR 1, they'll also file GSTR 3 by 20th of next month. This is the basic concept which is followed by those category of persons whose turnover is more than 5 crores, where they cannot go for QRMP scheme and they'll file GSTR 1 on monthly basis by 11th of next month. Apart from that, they'll also file GSTR 3B by 20th of next month. And as we all know, GSTR 1 is only statement for outward supplies, and 3B is basically return come payment set off. Return come what, my dear friends? Payment set off. That's what I always say, that is a summary return. Clear, guys? Now, one point which I'm sure everybody knows, guys, but still, out of my curiosity, let me tell you, that is, if there is, let's say, one company known as Reddy Labs. This company, Reddy Labs, is a registered person in Andhra Pradesh. These guys, what they have done is, they have supplied medicines. They have supplied medicines to, let's say, one company known as PQR Limited, which is also a registered person in Andhra Pradesh. Now, what is the interesting point here is that this entity, Reddy Labs, who is the supplier, he will file GSTR 1 by 11th of next month. Okay, clear? Now let's say for a second, this transaction happened in August 2020. Now GSTR 1 is to be filed by 11th of September 2020. Correct? Exactly. Now, what is the interesting point you have to notice that whatever details are declared in GSTR 1, these details declared in GSTR 1 will auto-populate. What is that word, my dear friends? It will auto-populate in GSTR 2A of PQR Limited. Now, please understand one simple line I will tell always to any of my friend or student. I tell only one line, that this GSTR 2A is something like Form 26AS in income tax. Like our income tax in Form 26AS, we see our TDS credit. In GST, to see our input tax credit, we use this form GSTR 2A. That's very important to know, because we actually are supposed to take credit based on these forms of GSTR 2A. And please understand that GSTR 1 is filed by supplier, and the details which are shown in GSTR 1 by supplier will reflect in GSTR 2A for the recipient. And there is also one recent introduction known as GSTR 2B. I'll explain the concept now itself, because you will get clarity now itself. It's important, please. Now, please understand that. Now, one point, let me ask you once again, what is the due date for GSTR 1? The due date for GSTR 1 is 11th September, 11th of next month. Let's say this GSTR 1 is filed on 12th September. When it is filed? 12th September. If it is filed on 12th September, credit will reflect. I repeat, credit will reflect in GSTR 2A, but not in GSTR 2B. That's why what I always say is that GSTR 2B is a static document which will get freezed by 11th of September. That means technically, whoever suppliers have filed their GSTR 1 within the due date, only that will reflect in GSTR 2B. But 2A is not like that. 2A is a dynamic statement which keeps changing every now and then. Even though supplier is filing on 13, 14, 15, 16, whenever he is filing, it will automatically reflect in GSTR 2A, but not in GSTR 2B. What credit will reflect in GSTR 2B is only that credit which suppliers have filed their GSTR 1 within the due date. If suppliers have filed their GSTR 1 within the due date, then only that credit will reflect in 2B. If not, it will reflect in 2A, but not in 2B. Now, what is the significance of 2A and 2B? I'll tell you that, because I'm sure now next doubt will come that only what is significance of 2A and 2B. Listen carefully here. Now listen. So practical point I'll explain to you here with numbers. Please listen. So let's say in GSTR 2A, ITC reflecting is 200. Okay. And in GSTR 2B, ITC reflecting is, let's say, 150. How much is reflecting? 150 is reflecting. That's it. Or for simplicity, let me make it as 160, which is reflecting in 2B. Correct, my dear friends? But actually, in books, he has got a credit of 210. He has got credit of what, sir? 210. So I'm talking about, let's say, for example, there is one person, Mr. A. And this Mr. A, if he's looking at GSTR 2A, the credit reflecting is 200. And if he's looking at GSTR 2B, the credit reflecting is 160. But actually in books, as per his records, the physical invoices, it is 210. What is reflecting? Now I'm just giving a small example here. But again, in detail, we'll talk. In the GSTR 3B discussion, I'll show you what is the practical issue there. Now the point is that as per rule 36.4 of the GST rules, I repeat, as per rule 36.4 of GST rules, what they have specified is that credit that can be claimed, how much you can claim credit is only 105%. In fact, once upon a time it was 120%. that 120% have been subsequently reduced to 110%, and in this year, this 110% is further reduced to 105%. This was once upon a time 120%, which was reduced to 110%, and this year recently they made it as 105%. So what is the credit that you can claim is only 105% of credit reflecting in 2B. How much you can claim is only 105% of credit reflecting in 2B. So technically, what you can claim is only 160 into 105%, which is nothing but 168. 168, because 5%, 10% is 16, 5% is 8, of course. So what we claim is only 168. Actually, in his books it is 210, but what you can claim is 168 only. That's all. Now, one point, let me tell you, when I go to GSTR 3B session, there I show you in detail that in GSTR 3B, automatically 2B credit is coming. But what you can take is 105% of credit reflecting in 2B. But actually, as per books, as per my accounting books, I am eligible for 210. Now you get one doubt. So practically, should I take 210 or should I take 160 or should I take 200? Should I take 168? As per law, strictly speaking, as per law, maximum how much you can take is only 168, because 105% of credit reflecting in GSTR 2B, that is only considered. But people are taking 210 also, stating that why would I miss my credit? Just because my supplier did not file GSTR 1, how can you tell me I should not take credit? I should not be penalized for someone's mistake. Like this, so many court rulings are going on. People are filing their writ petitions in High Court, and they are also filing public interest litigation. So many issues are going on at higher forums, stating that just because supplier did not file GSTR 1, he made a mistake. How can you tell I cannot take credit? Clear? I just explained all this because I really want you to know what is 2A and 2B. Anyways, this discussion will again follow in session 3, where we'll talk about 3B, 2A, 2B. I'll proceed. Thank you. Going back to the discussion now. So as I told you guys, wherever turnover is more than 5 crores, they can't go for QRMP scheme. But where turnover is up to 5 crores, guys, these guys have been given an option to opt for QRMP. That is quarterly return monthly payment scheme. And this QRMP is not mandatory. This QRMP scheme is only optional, where quarterly they will file their return. But paying tax, they should do on monthly basis. Clear? But one point I'll tell you, like how these guys will file GSTR 1. These guys who have opted for QRMP scheme, who opted for what scheme, guys? QRMP scheme. They will do something known as IFF, which stands for Invoice Furnishing Facility. What facility? Invoice Furnishing Facility, which they have to report on monthly basis only the B2B invoices. And the reason and the logic for their B2B invoices is very clear, that B2B means business to business, where the recipient is also a registered person. That credit should reflect in GSTR 2A and 2B, right? That is the reason why they brought this concept of IFF, Invoice Furnishing Facility, where recipient can see the credit in 2A or 2B. Clear? But one point is very clear that this time limit is 11th, but in QRMP it is IFF case, it is 13th, guys. That is very important. Make sense, guys? Full details will follow. Next lecture we'll talk full detail about Invoice Furnishing Facility also. I'll show you how it looks. Then one student is asking one doubt, sir, ultimately mistake of supplier that he has not filed return. So why taxpayer will be penalized? That's what I'm trying to tell you. Recipient started shouting, saying that why should I be penalized when the supplier did not file GSTR 1? That's our whole point. But let me ask you one straight question, my dear friend. In income tax also, if TDS credit is not reflecting in 26 AS, are you eligible to take? Answer is no. What will you do? You will start calling that fellow and telling, sir, my TDS credit is not reflecting. File your TDS return. Revise your TDS return. You will start demanding or not? Yes. Then GST department is telling, do the same thing for GST also. But the problem is people are telling, should I do business or should I keep calling my suppliers? Asking sir file, sir file, sir file. That is a problem. Yeah, next. Another friend is asking, sir, is there any judgment got with respect to 2B or 2A? There is no judgment as of now which is being followed. There are different multiple high court rulings, but the problem with high court rulings is that any high court ruling will be applicable only for that particular state. So as on today's date, there is no set principle that whether you have to follow 2B or 2A or your books. But as per law, I told you it is just 105% of credit reflecting in 2B. That's it. Practically, if you ask me, sir, what you are doing, I write an email to my clients saying that, sir, as per 2B, this is your credit. 105% is this much credit. You tell me what I should take. Some of my clients tell, sir, ignore 2A, ignore 2B, take as per books. Tomorrow we will see what will happen. I will tell them that tomorrow issue may come, problem may come, but they will tell, okay, we'll see. Because today I cannot pay that much from my pocket. Now what to do? I have to listen to my clients. That's the practical issues. Then next. One of our friends is asking, sir, is IFF optional or compulsory? Compulsory. Once you go for QRMP, IFF is mandatory. Because if you don't do IFF, the recipient will not be able to see in 2A and 2B. So IFF has to be done. Next question. Sir, B2B invoices mentioned in IFF will reflect in 2B of the recipient. Yes, my dear friend. Because practically the point is that 2B is now not generating on 12th, 2B is now generating on 14th. That is an interesting issue now. Because for QRMP case, IFF due date is 13th, right? So 2B is now being generated on 14th instead of 12th. Because whatever are reflected in IFF, that should also come in 2B. That's where the government is generating 2B on 14th to cover the invoices which are shown in IFF. Done. I'll proceed and I'll go back to my presentation. Guys, can you please respond that PPT is visible? Yes, thank you. Moving forward, next. IFF, I just explained that to you already, guys. Invoice furnishing facility is an optional facility made available to registered person under a QRMP scheme. But one point is very clear that as per law, they would have used that language optional. But one point is very clear that even though it's optional, I always tell it is mandatory and compulsory. Because if we don't do that, recipient will not get credited. And recipient will start following up with us very badly saying that my credit is not reflecting. So according to me, it is mandatory, no doubt. Next. Eligible taxpayer can furnish details of such outward supplies to a registered person as he may consider necessary between the first day of succeeding month till 13th of the succeeding month. Then details of invoices furnished using facility in the first 2 months are not required to be furnished again in GSTR1. Obviously, when you quarterly you file GSTR1, that time you need not show again what you have shown in first 2 months. Full detail I'll talk. Next lecture where we'll talk about GSTR1 and QRMP, we'll talk in detail. Don't worry. Next. CMP08, a simple form which is just a statement cum challan. Nothing is there in this. Just 2 lines, guys, for composition where quarterly basis by 18th of quarter ending they'll pay the tax using this form CMP08. Please see that. Composition dealer will use this form CMP08, which is a special statement cum challan. Which is what? Statement cum challan to declare the details or summary of his or her self-assessed tax payable for a given quarter. It also acts as a challan for making payment of tax. A taxpayer who has opted for composition scheme has to file CMP08 in order to deposit payments every quarter. How do we fill this form and pay the tax? I'll show you. Next lecture, I'll show you this. Don't worry. Then, form CMP08 must be filed on a quarterly basis on or before 18th of the month succeeding the quarter. So the reason why we are discussing all this because without having overview of these returns, next lecture becomes difficult. That's why we are discussing all this. Next. You can see an example. Due date to file CMP08 for Jan to March 21 was 18th April 2021. That's it. A simple statement cum challan CMP08. Yeah. One of our friends is asking, sir, in QRMP, whether I have to show all invoices raised during quarter in GSTR1 filing before 13th of succeeding quarter or in IFF monthly basis. The point is very clear. In IFF, on monthly basis, if you have shown all the B2B invoices, quarterly when you file GSTR 1, you need not show that 2 months details again in GSTR 1. So third month, when you file your GSTR 1, we will only show that month B2B. And of course, B2C will show for all the 3 months. Because in IFF, invoice furnishing facility, we have not reported B2C. We have reported only B2B. Please understand that. I'm sure I'm clear. Done. Next. So that's about CMP 08, guys. In case of quarterly payment of tax by 18th of the month succeeding the quarter. Clear? And as I told you, let me repeat that once again, that the tax rate in case of composition is very clear that in case of trader, manufacturer, it is just 0.5 plus 0.5. And in case of restaurant and catering service, it is 2.5 plus 2.5. Other cases, it is 3% plus 3%. Next point. GSTR 5, guys. You can see that there is one fantastic guy there, one beautiful person who is coming to India. And this person is known as NRTP, non-resident taxable person. This is a quite interesting concept. Why? Listen, when I talk about an NRTP, guys, which stands for non-resident taxable person, he is one such kind of person who is basically sitting in foreign country but wants to come to India to do business in India. But the problem is he is not coming to India for doing business in India permanently, nor to open a shop or store in India. He is coming to India to do business only for a temporary period. So when he's coming only for a temporary period, law specified that instead of taking normal registration, my dear friend, you please take NRTP registration, which stands for non-resident taxable person. And let me also tell you that the registration taken by this NRTP will be valid for the period specified in the application or 90 days, whichever is earlier. For period specified in application or 90 days, whichever is earlier. And that can be extended for another maximum 90 days. And one more great point to be kept in mind, that is, in general, any person who is liable to be registered must apply for registration within 30 days from the date he is liable. But this NRTP case, it is not like that. That is, NRTP must apply for registration at least 5 days prior to commencement of business. So guys, in general, registration should be obtained whenever whoever is liable, they should apply for registration within 30 days from the date when they are liable. But in case of NRTP, it is not 30 days from when they are liable. It is straight away 5 days prior to commencement of business. So before commencing business, at least 5 days prior to commencement, they should obtain their registration. And that too, they're also required to pay advance deposit of tax, where they have to estimate what is their tax payable and they should pay the tax as advance. And one more point to be noted here. Like NRTP, there's also one special category of person known as CTP, which stands for casual taxable person. Now, what is difference between CTP and NRTP? One line, let me tell you. For example, sir, if Shivateja is in Telangana, I want to go to AP, Andhra Pradesh, to do business for temporary period. I'm not opening a shop nor a fixed establishment in Andhra Pradesh. Let's say some exhibition is going on in Vizag in Andhra Pradesh, but I want to go there and present my items in that exhibition. Then I will go to that state and take CTP registration. CTP is applicable in case where one person who is in one state who wants to take registration in another state for temporary period. But NRTP is somebody who is not an Indian guy, who is a foreign guy, but he has come to India to do business in India for temporary period. But he does not have a fixed place in India for business, and he does not have a residence in India. He is only known as NRTP. Now, one point is very clear that CTP, being an Indian guy, he has got a PAN in India, permanent account number. Using that PAN, he can apply for GST registration. But the problem is with NRTP, non-resident taxable person. If he is having PAN, he will apply for registration using his PAN. Now, my question to you is, what if NRTP does not have PAN? What he should do? How he should get registration? We know that GST number itself is a 15-digit alphanumeric code, where PAN is a mandatory thing to obtain registration. Then how should NRTP take registration? For that, what they have specified in the law is that NRTP can get registration using his passport number. Using his passport number, he can apply for registration in India. And in case where if the NRTP is a foreign entity, like a foreign company and all, they will obviously not have a passport. So in that case, they told they can obtain registration in India using their tax identification number in the foreign country. So using their identification number in the foreign country, they can obtain registration in India. Very, very important point. Good. So one of our friends is asking question. Sir, while obtaining NRTP, so before that, wait a second. Before that, there is one question. For NRTP, CTP, PAN is required or not for registration? Already I answered this. Next. So while obtaining NRTP registration, taxpayer is required to pay estimated tax liability. Yes, of course. But if a sales tax liability is more than tax deposited, then will any interest be charged on short payment? My dear friend, let me tell you, answer is no. For the reason being very clear that because NRTP, we are paying tax on estimate basis. If it is estimate, then subsequently, if extra sales happen, for that, as of today, in the law, there is no question of interest and late fees. Unlike in income tax, for deferment of advance tax, we have got 234B, 234C interest, but here there is nothing like that given in the law as on today's date. Clear? Yeah. Next. One more question there. Is there any threshold limit or any exemption for taking registration for NRTP, CTP? Brilliant. Let me tell you guys, as per section 24, compulsory registration for CTP, NRTP, there is no threshold limit. Right from day one, they are liable to pay GST. That is the reason why I told you that they should apply for registration at least 5 days prior to commencement of business. There is no threshold limit for CTP or NRTP. Done. Yeah. Now see the points. GSTR file is a return to be filed by NRTP who are registered under GST and carrying out business transactions in India. Then this return contains the details of all outward supplies made, inward supplies received, credit note, debit note, tax liability, and the taxes paid. Next line you can see GSTR 5 return is to be filed on monthly basis by 20th of each month under GSTIN that the taxpayer is registered in India. Clear? So what is the due date of GSTR 5? It is 20th of next month. Now don't get one more doubt. Sorry, CTP, what form he will file? CTP is regular routine forms. How a normal registered person will file the returns, CTP also will file the returns in the same manner. There is one special return, GSTR 5, only and only in case of NRTP, that is non-resident taxable person. Next one. Next, guys, GSTR 6. This is return for an input service distributor. That is nothing but ISD. Input service distributor is one special concept which has been copied from service tax because it is there in service tax before itself, where if any head office is registered as ISD, whatever tax they have paid on input services, that tax or that credit they can distribute to their branches. And that distribution they can do only to their branch who has got a same PAN. Reliance cannot distribute to Tata. Tata cannot distribute to Reliance. In the same manner, Reliance head office, if they have got some credit of tax paid related to input services, that credit of the tax paid related to input services, that they can distribute to their branches who have got same PAN. Next, GSTR 6 is a monthly return to be filed by an ISD input service distributor. It will contain details of input tax credit received and distributed by ISD. It will further contain details of all documents issued for the distribution of input credit and the manner of distribution. And the due date to file GSTR 6 is 13th of every month. So what is the due date for GSTR 6, my dear friends? It is 13th of every month. And GSTR 6 is applicable only for input service distributor for the purpose of distributing the credit of the tax paid only on input services. Only input services credit can be distributed. They can't distribute credit related to goods, inputs, or any capital goods. The credit what they can distribute is only the credit related to input services. And for distributing credit like this, it is mandatory that they should take registration of input service distributor and they'll file monthly return by 13th of every month. Yes. Next point. GSTR 7, return for taxpayer deducting TDS. Something very important, guys. Let me change my screen so that I'll explain you the concept of the TDS and TCS and get a clarity of the thought there on what exactly this TDS, TCS under GST actually mean, my dear friends. Listen. Yeah. So when I talk about TDS under GST, my dear friends, let me tell you first one point that this TDS under GST is governed by section 51. And as on today's date, this is applicable only to any department of central government or state government, public sector undertaking, or a society established by central government or state government or local authority. Only to this category of persons, the provisions of TDS is applicable. And moreover, the TDS, the interesting point there is that in TDS, they have clearly given in the law that this TDS provisions will apply only if contract value, I repeat, what value, my dear friends? Contract value is more than 2.5 lakhs. Contract value is more than 2.5 lakhs. In that case, TDS will be done at the rate of 1% plus 1% or straight away 2%. 1% because CGST and SGST, 2% if it is a case of IGST transaction. Yeah, now some interesting point let me tell you here, that is TDS is 1%, 1%. Now let's take an example like this here. So let's say one person, Mr. A, who is a dealer in stationery items. This guy is a dealer in stationery items, and this man has supplied goods for 10 lakhs. 10 lakhs contract he has got, and he has supplied to central government department. And what is the value? The value is straight away 10 lakh rupees. Now, what happens is very clearly, my dear friends, that when central government is making payment to A, from 10 lakhs, they will reduce 1% plus 1% as GST TDS. Now, please understand that income tax TDS is different, GST TDS is different. I repeat, that income tax TDS is different, GST TDS is different. Please understand that in income tax, like how GST TDS is there, 192, 194J, 194I, 194H, but in GST we have got only one section, that is section 51, which talks about TDS in case of GST, which will come into picture only when the contract value is more than 2.5 lakhs, and that too it is now practically applicable only in case of department of central government, state government, public sector undertaking, society established by government. Only for these specified categories, this concept of TDS is applicable. Now, what happens is that the central government department, they will file GSTR 7. Come on, what is the form they will file, my dear friends? They will file the form known as GSTR 7. Now, what happens is in Mr. A, GST login under option of TDS TCS credits. What option, guys? TDS TCS credit. He can see this TDS credit, and what he has to do is this TDS credit, he should go there, he should accept it and file it. And once he goes there, accept it and file it, what happens is that that amount of TDS will come and sit in electronic cash ledger. Now, I'm sure you guys know the difference between electronic credit ledger and electronic cash ledger. Electronic credit ledger reflects only the input tax credit, but electronic cash ledger is not for input tax credit. Electronic cash ledger reflects the amount of tax or amount what we have deposited from our own pocket. It is not credit. Credit will reflect in electronic credit ledger, but this will come and sit in electronic cash ledger. Getting clarity, guys? Now, please understand that this TDS under GST will not come and reflect in Form 26AS. It will reflect only in GST. There we need to go and accept it and file it. And after we accept this TDS amount will come and sit in electronic cash ledger, which we can use it for the purpose of payment of tax. Now, let me also show you practically how this looks, guys, so that you'll get a clarity of thought there. Let me open the GST portal. Is the GST portal visible for all of you guys? Yes, thank you. So now listen, my dear friends, let me open one client case. Client confidentiality, but still for clarity, I'm showing this. You can see that. Under services option, guys, under services option, under returns, there's an option of TDS TCS credit receipt. Able to see that? Yeah. We'll click this TDS TCS credit receipt. If I click that, let me open the month of January. This guy had some TDS credit. This is one of my client who's into electrical items. And what has happened is in one particular month of January, he supplied the electrical items to the state government department. So obviously the state government department, when the contract value is more than 10 lakhs, they'll definitely do TDS. Now I'll show you here. If I click search, I can see here TDS TCS credit receipt. So here there is no data in this month, but let me show you another month. Hold on. In December month, we have some data. Once, yeah. December month we filed it. You can see that status is filed. If I open this, my dear friends, here I can see that TDS credit, what is there? If you see here, Director of Information Public Relationship, so and so month, they have filed GSTR 7. This is the value which is reflecting. So I'll go here and I'll click the accept button. And after clicking the accept button, I'll go and file my return. So let me open that page once again here. So let's say I select that month, December. So I'll go there first and I am required to accept that. So after I accept that, my dear friends, I'll come to the bottom and I'll file that TDS return. And once I file the TDS return, that amount will go and sit in electronic cash ledger. So if I see here in ledgers, in electronic cash ledger, if I go there, so let's say I open the electronic cash ledger, and that was pertaining to December 2020. So let's say October, and then let me select. Yeah. So if you see here, guys, you can see that in the bottom, I'm sure you're able to see something known as TDS credit. So you can see that there is a TDS credit which is reflecting. That's reflecting because that will come in that TDS TCS credit, which we need to go there and accept that. Only after I accept it and file it, then only this amount will come and sit in electronic cash ledger. Practically, the problem is a lot of people know that TDS is being done, but they don't know that they have to accept this credit. Then only that will come and sit in electronic cash ledger, because of which their TDS credit is being blocked. Because many people are not aware that they should accept and file it. Then only that TDS credit will come and sit in electronic cash ledger. Please understand that. And this TDS will always be applicable only when the contract value is more than 2.5 lakhs. That's very, very important. And the provisions of TDS are governed by Section 51. And as on today's date, it is applicable only to Department of Central Government, State Government, Local Authority, Union Territory, or a public sector undertaking. Yeah? Yeah. And one of our friends is asking, sir, is TDS calculated on base value or GST value? The TDS is always calculated on the base amount only. We do not calculate on including GST, we calculate on base amount. Then, next question. Is there any time limit to accept the TDS TCS credit? As on today's date, there is no time limit to accept TDS TCS credit. I myself have seen one case where one of my client 2 years back TDS credit, I accepted it and claimed. And a logic also I have got there, because that amount is not coming and sitting in electronic credit ledger. It is coming in electronic cash ledger. Now it is coming in electronic cash ledger. I can use it for payment of any tax, interest, late fees, penalty. For the purpose of payment of any amount, I can use it. Now, don't get me down. What if there is nothing to pay? If there is nothing to pay, then claim refund. Claim refund. You can claim refund from electronic credit ledger, electronic cash ledger, I mean to say. But you cannot take refund from electronic credit ledger, but you can still claim refund from electronic cash ledger. Then, another friend is asking, sir, only contract value or total amount paid in a financial year? Contract value, my dear friend. I repeat, contract value. Because if the contract value, let's say, is 10 lakhs and it is spread over 5 years, 2 lakh, 2 lakh, 2 lakh, 2 lakhs, but still TDS will come because contract value is more than 2.5 lakhs. We look at the contract value only. Next. Another friend is asking, sir, why they introduce TDS, TCS? First they charge to us, then we have to claim it again. Because logic is simple. In every transaction, government wants share. Simple. Any money flow is happening from here to there, we want some share. Starting itself. Yeah. And as I told you, again I'm repeating, it is not like 26As. This TDS credit will directly not come and sit in cash ledger. You should go to that returns option, that 200 TDS, TCS credit, accept that credit, file it, then only that will come and sit in electronic cash ledger. If not, it will not come and sit directly in electronic cash ledger. I'm very clear on this point. Done. Moving forward. Yeah, in the similar lines, guys, I'll take 2 more minutes of your time in the same context because I want to talk something about TCS also because both are related discussion. Let's complete TCS story also. Sir, let me write one name, Amazon. Everybody knows this, extremely popular, and it's an e-commerce giant. And technically we call it as an eco, which is nothing but an e-commerce operator. It's an e-commerce operator. Clear? Now one point is very clear that Amazon doesn't just supply their own products. There are a lot of other suppliers who supply their products through Amazon. Of course, when we get a box, there is one tape and seal of Amazon only. But if I open the box, I can actually see there and understand that the invoice is actually given by the actual supplier. Now, let's say one person, Mr. A, he ordered a laptop. And there is somebody known as Max Computers who is supplying the laptop through Amazon. Max Computers who is supplying laptop through Amazon. Now, my question to you very clear, my dear friends, that when A order laptop, will A directly make payment to Max Computers? Answer is no. It is not like an OLX platform. Mr. A will definitely make payment to Amazon. Let's say 1 lakh he paid. Now, when Amazon, he is paying to Max Computers, what he will do is from 1 lakh, he will reduce TCS. And let me tell you guys, the rate of TCS is 0.5% plus 0.5% or straight away 1%. In TDS, it is 1 plus 1 or straight away 2%. But in TCS, it is 0.5 plus 0.5 straight away 1%. And let me tell you one point that in TDS provisions will apply only when the contract value is more than 2.5 lakhs. I repeat, TDS provisions will apply only when the contract value is more than 2.5 lakhs. But in TCS, there is nothing like that 2.5 lakhs. TCS provisions will apply whenever there is an e-commerce operator involved and there is some other supplier who is supplying through e-commerce operator and consideration, that is a payment, is collected by e-commerce operator. Then only TCS will apply. If A is directly making payment to Max Computers, then there is no question of TCS. TCS story will come only when A is paying to Amazon, then Amazon is in turn paying to Max Computers. Then only the provisions of TCS will come into picture. If not, there is no question of TCS. That's it. And here in this case, Amazon will file one form known as GSTR 8. Like in TDS, it is GSTR 7. Here it is GSTR 8. Same logic. This will come in TCS credit. Go there, accept it, file it, and that amount will come and sit in electronic cash ledger. Same logic. And this is a practical point even in case of Zomato, Swiggy also. because a lot of restaurants and hotels supply their food items through Swiggy and Zomato. Now, when we are paying to Swiggy Zomato, that Swiggy Zomato will now in turn pay to the hotel. Swiggy Zomato will in turn pay to the hotel. Now, when Swiggy Zomato is in turn paying to the hotel, they will do that TCS. And that TCS is not a loss. It will come and again reflect in the GST portal, where we will go there, accept it, file it, then it will come and sit in cash ledger. And I repeat, one friend is asking same question: is there any threshold for TCS? As I told, there is no threshold for TCS. Threshold limit is there only in case of TDS. TDS provisions will apply only when contract value is more than 2.5 lakhs. But there is nothing like that in case of TCS. Next. Yeah. See that, my dear friends. GSTR 7. GSTR 7 is a monthly return to be filed by persons required to deduct TDS under a GST. This return will contain details of TDS deducted and TDS liability payable and paid. And the due date to file GSTR 7 is 10th of next month. Now, who will file this GSTR 7? That government departments, public sector undertaking, those guys will file this GSTR 7. Next. GSTR 8, return for e-commerce operator collecting TCS. GSTR 8 is a monthly return to be filed by e-commerce operators registered under GST who are required to collect tax at source. It contains details of all supplies made through e-commerce platform and TCS collected on the same. And GSTR 8 return is to be filed on monthly basis by 10th of every month. Next, GSTR 2A, already I discussed that with you. And I wanted to look at that circle there, that GSTR 2A contains the details of all inward supplies of goods and services that is purchased made from registered suppliers during a tax period. And the data is auto-populated based on data filed by suppliers in their GSTR 1, further data filed in IFF, that is Invoice Furnishing Facility. What is that? I already discussed with you. And you can see the title, what I wrote, GSTR 2A is only a read-only document. And next one you can see, 2B, it's a view-only static statement, which will not change. And you can see one line, it is a static statement generated once on 14th of the following month because of the logic of IFF. All the documents filed in GSTR 1 and GSTR 5 by supplier and GSTR 6 in case of ISD, input service distributor, after due date for filing will be reflected in 2B of next month. This month 2B, it will not come because it is not filed within the due date. For instance, suppose a registered person furnishes the details of outward supplies for the month of January after the due date. Corresponding details of inward supply and input tax credit will not be reflected in 2B of January month. However, they will reflect in 2B of next month. This point already I discussed with you, the difference between 2A and 2B. Anyways, full details will again follow in our third seminar, that is about 3B, 2A and 2B. Next. One of our friends is asking one question. Sir, do we have to make separate application for registration of TDS and TCS? Yes, my dear friend. That government department or PSU will apply for TDS registration and the e-commerce operator will apply for TCS registration. Then. Next point. GSTR 3B, summary of inward outward supplies. No doubt about it. Just an overview now. Details, I already told you. Next session. 3B is a monthly self-declaration to be filed for furnishing summarized details of all outward supplies, input tax credit. Remember, 1 is only outward supply. 3B is input tax credit also. Claimed, tax liability ascertained, and the taxes paid. 3B is to be filed by all normal taxpayers registered under GST. Sales and input credit details must be reconciled with the GSTR 1 and 2B every tax period before filing GSTR 3B. And reconciliation is crucial to identify mismatch in data that may lead to GST notice in future. How do we reconcile? I'll show you practical examples. Don't worry. Then frequency, I already told you, monthly basis, 20th of every month. Correct, guys? But for QRMP cases, quarterly cases. Quarterly. Because name only says QRMP, quarterly return, monthly payment. Next point. GSTR 9, annual return, my dear friends. name only says annual return, which is a consolidation of all the monthly data and which is generally mandatory for every category of person, which needs to be filed by 31st December of the year following the end of relevant financial year. But one note I want you to see, as per notification 47 by 2019, annual return for taxpayer having aggregate turnover not exceeding 2 crores has been made optional, stating that whoever turnover is not more than 2 crores, annual return is optional for you, not mandatory. And you can read one line here. It contains details of all outward supplies, inward supplies during the relevant financial and the different tax rates and a summary value. So basically, it's a consolidation of all the monthly or quarterly returns. And there are some special cases where this GSTR 9 is not applicable. In fact, one day we planned one separate session on GSTR 9 and 9C. There we'll talk full detail about 9 and 9C. Next. 9C, guys. Return for registered persons getting accounts audited from CA. In fact, every person as per law, whoever aggregate turnover is more than 2 crores, they should get one reconciliation statement prepared in case where turnover exceeds 2 crores. But practically, one point you can see now, that is, as per CBIC notification 16 by 2020, they increase the limit of 2 crores to 5 crores, telling that this 9C concept is only for that category of persons whoever turnover is more than 5 crores. And on latest amendment, Finance Act 2021 has removed the concept of GST audit. They removed the GST audit. In fact, this GST audit is applicable for those category of person whoever aggregate turnover is more than 5 crores. And that is conducted by chartered accountant or cost accountant practicing. And they'll certify this form 9C. And government removed this GST audit. Gone. And they brought a concept of self-certified reconciliation statement, which is to be filed along with GSTR 9. Don't worry, just because 9C is gone, chartered accountant work will not go. Our work is still there. But just that, our signature will not come because 9C is not there. But whatever contents are there in 9C in the form of reconciliation statement, same thing they brought as self-certified reconciliation statement. That also we will talk. We have a separate session planned for 9 and 9C. Don't worry, because 9C, don't think it is redundant. It is still applicable because the content still remains same. Our signature is not there. That's it. Clear? Next, let me proceed. GSTR 4, return for composition dealers. It's an annual return. GSTR 4 is an annual return that is to be filed by composition dealer. Unlike a normal taxpayer who needs to file 2 monthly returns, a dealer opting for composition scheme is required to furnish only 1 return in a year. That is GSTR 4. And under the scheme, small taxpayers having turnover up to 1.5 crore or 50 lakhs, we discussed that, need to pay tax at a fixed rate, 0.5, 0.5, 2.5, 2.5, and file CMP 08 in order to deposit payments every quarter. CMP 08 is only for paying the tax, but GSTR 4 is an annual return. We'll talk in detail. Due date for GSTR 4, due date is 30th April of the year following the end of relevant financial year. Say for instance, one person, one entity, Kapoor Private Limited, is a composition dealer who needs to file his GST return for 2021. The due date for GSTR 4 therefore would be April 30th, 2021. Next. Late fees and interest, guys. Small discussion. See that? Late fees is because we file our return late. Interest because we paid the tax late. For all the GST returns, guys, the late fees as per law is 25 rupees under CGST, 25 under SGST, total 50 rupees. And for nil return, it is 10 rupees, total 20 rupees per day. And as per law, the late fees maximum is 5,000. 5,000 under CGST, 5,000 under SGST. So technically it becomes 10,000. This is the late fee, what is there practically. But of course, in the recent GST Council meeting, they reduced the maximum limit. What is that? That also I'll show you. Don't worry. Next. Annual return. For annual return, the late fees is 100 in CGST, 100 in SGST, effectively 200 per day of default. And the maximum is 0.25% of turnover. And 0.25% language they used in CGST Act. So technically it becomes maximum late fees is 0.25% of turnover under CGST Act, 0.25% of turnover under SGST Act. So technically the maximum late fee becomes 0.5% of turnover. point. COVID relief, recent concept, which is as per 43rd Council meeting held on 28th of May 2021. A latest point, please see that. In case of late fee for delay in furnishing 3B and GSTR 1, for taxpayers having nil tax liability, there is no tax in the return. Then they told 250, 250, maximum 500. That's it. So what was 5,000, 5,000, 10,000? They made it only 250, 250, 500. Telling enjoy, it's okay. We understand that we are late. Then for other taxpayers, that means where there is a tax liability and if turnover during preceding year is up to 1.5 crore, then maximum late fees is 1,000 plus 1,000, 2,000 and 1.5 crore to 5 crores, 2,500 plus 2,500, maximum 5,000. And above 5 crores, it is 5,000 plus 5,000, the general limit, that is 10,000, which is already there in the law. Same thing in case where turnover is more than 5 crores. But if it is 1.5 crore to 5 crores, then it is 2,500 plus 2,500. Up to 1.5 crore, 1,000 plus 1,000. Next. In GSTR 4, the late fees is for nil return 250 plus 250, same story, and other return 1,000 plus 1,000. And for GSTR 7, what they have done is they reduced it to 50 per day, 25 rupees plus 25 rupees, and maximum cap is 2,000, that is 1,000 plus 1,000. Same logic already we discussed. Then guys, next story, interest. Finally, this interest story income in case of late payment of GST liability. And practically, as I told you that GST return is not automatically calculating interest, but there is a high possibility that department will come back to us and charge interest. I myself have practically seen so many cases of my clients where GST officer has sent a notice stating that please pay interest. And the rate of interest is 18% per annum. But in certain special case where excess input credit has been claimed, we claimed credit more than what we are eligible, or excess reduction in output tax. That means output tax we have shown less, or we have claimed more credit. Then the interest rate is 24%. Government ego is hurted. 24% per annum. But the general interest rate is 18% per annum. But in case where excess credit is available or output tax is shown less, then the interest rate is 24%. Next point. You can see one small example, guys. The interest must be calculated from the next day on which tax was due. For example, if the taxpayer fails to make a tax payment of 10,000 for the month of December 2020, where the due date was 20th Jan 2021. If he makes the payment on 20th February 2021, the delay is 31 days. Why 31 days? 11 days in January, 20 days in February. So what is the interest then? 10,000 into 18% into 31 by 365, which is working out to 153 rupees. Please understand that 18% because if it is normal delay in payment of tax. But if it is a case of excess credit availed or less output tax shown, then the interest rate is 24% per annum. Make sense, guys? Correction in returns. By any chance we filed the return and if there's any mistake in the return, the only option is that we cannot revise the return. First point is very important. Please see that. Returns once filed cannot be revised, unlike income tax. All changes can be made in subsequent returns only. And in case of GSTR 1, there is a separate column for amendments. Where is that column? I'll show you in detail. Don't worry. Separate column, I'll clearly show you in detail. Next lecture, don't worry. Then, if an invoice has been missed in GSTR 1, the same can be uploaded in subsequent month GSTR 1 and the tax to be paid through GSTR 3B. Obviously, because GSTR 1, we don't pay the tax. Tax set off happens only in 3B. Next line. If any invoice has been wrongly entered but remains unmatched, it can be amended in subsequent returns. How to amend? I'll show you. And post-transaction changes to be done through debit note or credit note. Already I told you this, that debit note is for increasing the tax, credit note is for reducing the tax. Then, other details like B2C supplies, that also can be amended in subsequent month returns. I'll show you in detail, guys, what is B2B, what is B2C. I'll show you in detail. Today's discussion was more about overview of GST returns and also the basics of GST, so that you are prepared for next 3 seminars or next 3 sessions where you get in-depth discussion on 1 and 3B. Then, The maximum time limit for amendment is due date of return for September month following the end of financial year, or date of filing annual return, whichever is earlier. So for example, what we say is that if financial year, let us say, is 2021 following September is September 2021. And for September 2021, the due date to file return is 20th October. So technically, to do any amendment, to do any change in the return, what we have done, we can do that changes maximum only by 20th October 2021. So for any change of 2021 financial year, we can do maximum by 20th October 2021. Anyways, I'll show you the amendments column. Don't worry. How do we do that amendment and why that amendment issue also will come? We'll talk in detail. Don't worry. That's about the discussion on the basics of the GST. At the same time, also the discussion on overview of GST returns, so that you get a great clarity of thought there on what are the types of GST returns we have got. At the same time, you also get clarity of thought on the basics of GST. Clear? And 1 and 3B, anyways, we'll talk. Next session, we'll talk about GSTR 1 and other interesting points there. I've given my mail ID and phone number also there, so that in case of any queries, you can reach out to me.
Sir, 2 more queries from our students regarding the...
Yeah, sure. I'll answer them. So, this point we have answered. Sir, if no contract value decided, but around the year a vendor supplies services to a government department liable to GST TDS, if each month value is 30,000. My dear friend, let me tell you, as per law, they have given that TDS will come only when the contract value is more than 2.5 lakhs. If it is not more than 2.5 lakhs, question of TDS will not come. And practically this case of yours will not come. It's only a hypothetical case, because in case of government contracts, generally they fix the contract value in the beginning itself. Then, is there any late fees for GSTR1? Yes, my dear friend, as I told you that there is a late fees for GSTR1 also. I agree. Practically it is not auto-populating. I accept to that. But as per law, there is a late fees for GSTR1. Next, another question. Sir, for invoice missed in current month filed in subsequent month, interest needs to be paid. Yes. Yes, of course. Because 1 month invoice you have shown in next month, right? That means you paid the tax late. You have to pay interest. In 3B, you have to pay the interest. Practically, we are not paying, because we are on a mindset that when department gives notice, we'll pay, because the interest is not calculating automatically in the return. Next point. Can one branch transfer GST credit to other branch without IS registration for audit fees if company do not have separate head office? Not possible, my dear friend. If they want to distribute their credit related to input services, they should take ISD registration. Without ISD registration, they can't distribute their credit. Credit distribution can happen only if they have ISD registration. Next. What if a company has online portal and selling products to customers directly? Will there be TCS? No. I already told you that TCS story will come only when there is an e-commerce operator involved and some other person is supplying through e-commerce operator, and e-commerce operator is collecting consideration on behalf of actual supplier. So by any chance, if anybody develops his own website and selling through his own website, then there is no question of TCS. Next. So link for PPT, already we shared that link. It's there with you guys, and branch will again share with you. Don't worry. Thank you. Thank you. PPT. Next. Is there a time limit to utilize credit? Already I told you that 2A, 2B is for monthly credit. Anyways, we'll talk in detail in 3B session. Don't worry. Thank you. Thank you. Tomorrow I'll not attend. How do I get the video? Kindly contact the branch for this. Yeah.
We'll send the YouTube link. No problem.
Will interest include penalty for that month or quarter? My dear friend, interest is different, penalty is different. What I told about 18%, 24% is only interest. Penalty is altogether different. Interest is different, penalty is different. As simple as that. How I tell is, I'll tell you one example here. Might sound funny, but still I'll give an example. Let's say somebody slapped you. Okay? Yeah? That person will tell you, sorry. What do you feel? Wow, somebody told me sorry, it's okay, I'm satisfied. But real satisfaction will actually come to you when you reverse the slapping. Correct, no? Exactly or not? In the same manner, government also levied interest and penalty, both are different. Don't think interest and penalty both are same. Absolutely both are different. Next. Some more discussion on ISD. We'll cover that, don't worry. Thank you, thank you, thank you. Sir, please explain more about RCM concept with example. My dear friend, RCM concept will come again. Need not worry. In GSTR 1 or 3B, especially in 3B, in 3.1B column, where there is inward supplies liable to RCM, there I'll spend some time. Don't worry. There I'll open one PDF. I'll show you what are the cases of RCM and I'll explain that to you. Don't worry. Ma'am, anything else? I think I covered all the queries there.
Okay, sir. Okay. Thank you. Thank you, Shwetaja sir, for your excellent deliberation with detailed PPTs, mind maps, and so many practical examples. Our students with their chat boxes and messages only will reflected how much they are benefited from the session.
Thank you so much.
Really, it is excellent. And students also, please inform to your friends that the session is very good, so that they will also benefit, because even we are sending the YouTube link also, that this much interaction and involvement will not be possible while watching the YouTube, no? So please inform to your students also about these sessions. Thank you, sir, and thank you all the students for joining today's program. Tomorrow we will see at 6 o'clock. Thank you with this session.
Thank you so much, guys. Thank you very much. And don't miss any session. That's one thing I'll tell you in that 4 days. Don't think one day I'll come, one day I'll not come. You will not get that flow of concepts. Ensure that every day you attend so that you get full clarity on the concept. And after 4 days, what you were earlier, what you were later should definitely make a difference. That's the whole idea, what branch is having, and I'm also having. And special thanks to my team who supported in preparation of the PPT. Special thanks to them on behalf of everyone. Thank you.
Thank you.